Hello traders and Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. Well, it's been one heck of a day already, and of course last week was no better, but the reality is this is a big deal. We talked about the trend line, the long-term trend line on the Dow on Friday. We showed you this is the very same line right here, and we showed you we're right around here on Friday when we did the report, and it actually closed just below that, so it actually broke the line on Friday. But we also had our monthly trade triangle kick in, saying as the trend was going to go down anyway, and that came in at 17,579. So that's almost 2,000 points ago, and that's just using trade triangles. How we use them obviously is the major trend is the monthly and the weekly for timing. So you should be out of this market entirely. We've talked about that before, but this breaking of this long-term trend line that goes all the way back to 2009 in the first quarter when the market bottomed out, that is a big deal in my opinion. And it hasn't broken that. You can see it came down here, tested it again, didn't go down, and finally boom, it went through. So we could expect to see this market really go much lower, and we're down just 6% for the year. It's hard to believe, but we're down 6% for the year, and we could be down quite a bit more as we go forward. Now we're going to see bounces, don't misunderstand. It's going to be straight down, but we are going to see bounces. But the reality is I don't think this is something you want to jump in front of and try and catch a bottom. I don't think the odds are there. But if we just put our Fibonacci tool on, the retracements, so we go from the very high to the lows. That's the entire move from the lows that were seen on March 12th, 2009 to the highs that we saw in the May 22nd period. Okay, so we can easily come down. When we talked about this before, we said 15,581 sounded crazy, but we're closer to that number now. We're only about 400 points away, and we could even get there today. So that's how crazy things are. But the bottom line is you could be looking at this 50% retracement right here, which is 12,460. So these are the important levels to look at and where the market should begin to find support. First one is, I would say, right here, and that is a 38.2% retracement, which is 13,855. Then we got a 50% retracement right here. That is 12,460. And we have a 61.8% or 62% retracement at 11,065. These are the numbers I would be looking at in this market. Now you can put these easily on the charts that you have using our Fibonacci tool, which is right here. Okay, just click on that and you go from the very highs to the very lows, draw it, and you've got the Fibonacci numbers, the exact same numbers I'm looking at right here. Again, we're very oversold, which means we may see a bounce. I expect we will see a bounce, but the reality is there's not a lot of enthusiasm to pick a bottom in these markets. Let's move on. Next market is the S&P 500. Now the S&P 500 is down 4% for the year so far. Now that could obviously change the way these markets are swinging around, but this is a very important level for this market right here, and that's 1835 is a very important number for this market. So again, we may see a bounce from here, maybe back up, but every bounce is going to be met with selling pressure. That's just a given. This is the beginning, in my humble opinion, of a bear market, particularly in the Dow, because that's a major break of a trend line, and it takes a lot for that to happen. Now you could draw on this chart, you could draw a low from here and go up and say, yes, you've broken the trend line, you've got the 3 points, but I prefer to go from here, and there again, you haven't got the 3 points. You have support coming in at around the 1800 level. So let me just clear the screen off a little bit and show you what we're talking about in terms of potential retracements on this market. Again, click from the highs and all the way down to the lows, and you could be looking at 50% retracement down to 1400. Now I know it sounds crazy, so all of a sudden we're very bearish, but the reality is this has been a bull market 6 years old. It's a little old. It's not new, it's a little old, and bull markets do not go on forever. They have corrections. And you can see back here in the 2007 period, that was obviously a panic. We could see something very similar to that happening now in the markets. If we have a panic in terms of just China imploding and falling on itself, they don't know what to do, with it. We've got a Federal Reserve Board here in the United States that has no clue in what it's doing, doesn't know whether to raise interest rates, lower interest rates. It's locked. It's out of game. It's out of tools. It has no more ammunition to use, and that's the sad thing. They've used all their ammunition. Now, Janet Yellen, who's inherited this mess from Ben Bernanke, is at a loss of what to do. She's like, just doesn't have a clue. And the same goes for the rest of the members of the Fed. They just don't have the tools to do anything now. Now, this is the NASDAQ composite, a little bit different here. NASDAQ is about flat for the year, which is better than obviously being down 6% as you would be in the Dow. But again, this is not a good sign. You can see we had a signal in the monthly on the 20th of this month to get out of this market, and look what happened. It's over 350 points ago we had a signal to get out of this market, and boom, it crashed again. These are our trade triangles. They're just follow them, they work, and I think you'd be amazed at just how they can help you become a better trader. And if we put our weeklies in, you can see the weekly actually kicked in much higher at over 5,000, and I think that's the important thing. Monthly for trend, weekly for timing. Now, we've been talking about this for some time, and I know we haven't had a lot of believers in this, but the reality is this is a bull market. Yes, the Eurodollar is a bull market. And let me just scope this out a little further and give you some idea of why we're saying that. First of all of our trade triangles are green, okay? That's a very positive sign. You're over the 50 line on the RSI. You've also completed a major base. I'm going to scope this in just a little bit closer because I want to share with you my thoughts here. Okay, look at the space. So you have double bottom here. You have a double bottom here. This is incredible support. And then you have these pivot points, these double pivot points, okay? So you can measure from this level here to at least the minimum at 08. So that's 6 points. So you're looking at 20, which takes you back to this level here, and you could take even further down to 06, which would take you up to 22 and maybe 24. So you're looking going all the way back to these levels, which would certainly not be out of the question. It's actually gone further than most people. Most people were predicting parity with this market, and certainly if you just look at back down here, that was a pretty good bet. But the reality is the markets change, and that's the key thing. Don't get locked into any one side. Be disciplined. Follow the trade triangles. Look at what the trade triangles kicked in. This is our first buy signal right here, and that was at 11.27. And look at the profit you have in that position right now. So let's move on. Gold, again, there's a buy signal on gold at 11.26. It's 11.60 right now. That's $3,400 per contract right now, profit in this one position, just following the trade triangles. Last market, crude oil. Crude oil has been a big winner for us. We've been short this market from 52 and also from 58. So you can see it's just been a non-stop money machine for us. I mean, this is tremendous amount of money. We lost money in this quarter, absolutely, because the market didn't go anywhere, but in the last quarter, we've just cleaned up, and that's the key thing. One thing I want to share with you, and I've talked about this before, and it is going to happen eventually, but look at the RSI. The RSI right here is just flat, like this. It's actually trending up, and this is going down like this. This is going to reverse eventually. This is going to go back up. I would say that somewhere along the line here, within maybe the next 3-6 months, we're going to see a reversal in oil, and maybe much sooner than that, but it's going to have an upward correction. I'm not saying a complete change of direction. I'm going to let the trade triangles tell me that. I'm not going to be trying to overthink these markets. A lot of people make this mistake in trading. They overthink the markets. Just keep it simple, stay disciplined, and you will make money. Hey, I'm Adam Hewison. Thanks for watching the video, and every success.